At IB Canada Group, we are your complete and independent source on the infinite banking concept, serving Canadians from coast to coast.
How can infinite banking put more money in your pocket? Picture this. You and your spouse are buying a car and you settle on a trade-in price of $35,000. Your payments over the next 60 months are $667. That means that over the next 5 years, you would pay $40,000, and $5,000 of that is interest. Now let's skip ahead. 5 years have passed, and you have a 5-year-old car, and you've said goodbye forever to your $40,000. But question, who has your $40,000? Well, the lender, of course, because it was theirs to start with. They paid out the car company exactly 5 years earlier, and you paid them back over time. Now it's time to buy another car. So you use its trade-in value and you decide to borrow another $35,000. Where did the lender get the money they're going to lend you? Well, they got it from you over the past 5 years. And they got it from many other people like you who have not yet discovered the infinite banking way of buying things. If we play this out over the next 40-year period, buying just one car, let's say every 5 years, that's a total of 8 cars, that would have cost you $320,000. It's a lot of money. What if we had our own banking system that we helped you start? How much more would you have? So let's put in a fictitious interest rate of, let's say 2%, growth rate rather, because we're borrowing against our own money. And so we've got to take the borrowing cost into consideration. So your $35,000 would not be going to someone else anymore. At the end of the 5-year period, you could have up to $80,000 because you're paying that $667 to your own banking system. You can see you're in a much better position. And over a 40-year period, or let's say 41-year period, you can see how much better of a situation you would be in. Our clients are always amazed when they first see this. And once they see it, they can't unsee it. They realize that this is money that they would not have in their retirement account if they'd have gone the traditional way of financing a car through somebody else's system. What are we giving up when we're using someone else's bank? Infinite banking is about recapturing the interest that we're currently losing when we're using other people's banking system instead of our own. If you're not using your own banking system, whose banking system are you using? Whose retirement and families are you supporting? Well, it's certainly not your own. Infinite banking allows you to change the direction those payments are going so that you can have them coming toward you rather than always going away from you. It's a situation that looks like this. You start saving money. When you borrow against it, by the time you pay it back, you've got much more. And this continues to compound because now you're keeping your capital. Many times when we talk to people, they're in this situation right here where they're trying to fill their retirement buckets, but the retirement buckets have many holes in them, either through taxes, interest payments going the wrong way, or debt that's bad debt. And these are opportunity costs, lost opportunity costs, and it's costing them dearly. And many times financial advisors are telling you to keep putting more money in because it's not growing fast enough. I'm not sure if that's what they're doing for you, but many times that's what our clients are telling us that they're hearing from their advisors. Wouldn't it be much quicker, instead of trying to pour more money into it, if you could just fill those holes, plug them, stop the opportunity costs, and stop the drain? Then your retirement buckets would fill up much more quickly, even if this was a trickle. And not only that, they would stay filled.
IB Canada Group, your independent authority for information on the infinite banking concept.